Okay, thought I'd start out here giving you a real quick synopsis of the markets today, September 3rd, 2009. The general pattern, what I have here is I have a chart on the left, which is the NASDAQ index, and a chart on the right, which is the S&P index, two of your primary market index. And there's a extremely similar quality between these charts and these two indices. First thing I'm going to do is measure the distance between the ceilings, which is price thresholds where people didn't like that high price. And what you're seeing is a decrease in the distance that price has risen in the upward trend or the correction that we're seeing in the market. That decrease in movement, the vertical distance in price, you can actually see we had a pretty healthy run this summer, and then in the last couple months here, we've seen it really slow down here. So nice rise in price followed by a very small rise in price. That's what we call slowing momentum, and it's a strong indication that the momentum of the market's dying and it's getting ready to potentially change its trend. Now I'm going to go ahead and remove those lines for those symbols, and I'm going to take this chart and I'm going to maximize the NASDAQ out, and I'm going to drop it from daily to a weekly time frame. I'm going to paint a bigger picture for you. The market's been in a primary downtrend, and we can do a trend study where we connect the pivots, and we are trading at an extremely powerful technical level, a reason for the market to slow down and change. There's also a historical support zone where old price floors tend to become new price ceilings, a very common phenomenon where a floor, for example, will become a ceiling. There's an example of it back here, where the old floor becomes the new ceiling. So here's a very significant price floor, which failed last fall, and we see it coming back up into that area. Strong, strong, strong technical levels. And the exact same scenario is occurring on the S&P index. I'm going to go ahead and remove those lines. I'm going to change it from a daily time frame to a weekly time frame, and allow you to see these strong technical levels also exist on the S&P index. Now, that is coming to a strong technical level, and it's got a long, long, long way to go before it gets to the old floor. However, there's technical levels called Fibonacci ratios, and the market is trading at one of the most powerful Fibonacci ratios, which is a 38.2% retracement, and that's of the entire market drop. It's also trading at a 50% retracement of the last move. This becomes an extremely powerful technical area, and you'll notice that these all kind of match up. There's a fractal nature to the markets. It's really very interesting. And if the Elliott wave theories hold true, our market is due for another leg down. Historically, September and October are the worst months for the market, and here we are on September 3rd with the market slowing down into a trading zone. Now I'm also going to show you one other thing. I'm going to take this and I'm going to change it from the S&P index to the SPDR, which is the exchange traded fund based off of the exact same index. The chart will look the same, but it's 1/10 the value of the index. I'm going to go back to the daily time frame, and I'm going to make you look at the volume picture, and I'm going to show you that on the big sell-off we saw the other day, we have a huge spike in volume, 2 times the average daily volume on the initial sell-off. If the market takes out this trend zone or this support zone down here, that's a really big technical level for the market, where if it takes that out, you'll see a lot of downward movement in price. And I'm going to show you one other thing coming out here. I'm going to go open up a calendar on Yahoo Finance, and tomorrow, the 4th, there's a non-farms payroll report coming out. This is the jobs report. This is a big deal. If this number comes out that it is worse than expected, that could be a real catalyst that could add fuel to the fire and really start the ball rolling to the downside. So there's a lot of psychology already built into the technical side of the market, and then the fundamental side of the market may or may not coincide here. We'll have to see how that plays out. But hopefully you found this educational, and watch out. The bears might be coming, and they do have claws.